So the premise is I would say at least twice a week, I barge into Taimi's office, usually after lunch when I've had some time to myself to think, and like to ask him a question that usually has no answer.
Leaves me thinking for the rest of the day.
Yeah, I usually like to fry his brain around 1 o'clock. So Taimi has no idea what I'm going to ask. There may or may not be an actual answer.
Or a question.
But today's question or thought or idea to explore is who moves the market?
Which market?
Let's just say the S&P 500. Because when a stock or the S&P as an index moves, people usually will say like, oh, people saw this. People are thinking about this. This was in the news. That's why that's moving. But when they say people, it's like, it's not me. Mm-hmm. I can make a trade, but I'm not the one moving the price. So as I guess you can consider me a retail investor.
Yeah.
I'm likely not the one that's moving the stock price. I'm certainly not the one that's moving an index. So who are the players? And then we can kind of discuss how they play with each other.
Well, that's such a deep question. Well, we know the index is not an actual thing.
Right. It's representative.
It's a representation. It mostly is a formula. What you see that changes, the outcome of it changes every single second. But this formula is based on certain calculation of these listed companies in there. Mm-hmm. So if we want to say who moves the entire index, and let's assume you mentioned the S&P, so that's market weighted, mm-hmm. then we have to look at the biggest names in the index.
Right. We know that just because of the size of their market cap, an Apple or a Microsoft has a lot of pull when it comes to what the S&P is doing, because from a weighting perspective, they make up more than most companies.
Yeah.
So understanding that, but what makes an Apple or a Microsoft or any kind of large cap, who are the buyers? Because I highly doubt it's a bunch of me's. It's probably some of me's, but there's other people.
Definitely, yes. Now, there are companies in the industry mm-hmm. that, they have the retail investors, they put their money with them and they go buy funds. These funds have some of the Apples and Microsoft, etc.
Yeah.
There's those. But then there's the bigger ones. Mm-hmm. Those ones that their business is to acquire and grow their assets based on investment.
Yeah.
So it is like you and me, but it's an entity that has ginormous coffers.
Right, with either tons and tons of money or tons and tons of investors in the funds and whatever. So when we see one of the big stocks, since I probably can't say, when we see one of the big stocks, maybe today, for instance, jumping 2%, I mean, who's driving that? Obviously, again, some of us normal folk, but some institutional. Mm-hmm. I guess how does it work when some people see something in the news and say, okay, that makes me optimistic about the stock price, which we can kind of talk fundamentals maybe in a different video and how people gauge what a stock price should or shouldn't be. But there's got to be another side to that, right? Because somebody's willing to sell.
Not necessarily.
Okay.
And see, that's the thing, because it's people betting to buy it, and there's people offering to mm-hmm. sell it, and vice versa.
Right.
But when you have so many more bidders and so fewer sellers, the price will see a bigger fluctuation.
Because you have to provide the capital, in order to convince that person to sell to you.
Yes.
Yeah.
So there's always this big move, but mm-hmm. there's always, if we look at historical trends and we say that this stock, the one that you mentioned, for example, usually trades between 1% to 2% a day, mm-hmm. up or down. So when you see that price moving every day, you think, that's normal for this stock, because there's always buyers and sellers.
Yeah, there's a lot of liquidity
in it.
Yeah.
They're willing to trade hands. Mm-hmm. But you see a change for that stock that is today is, for example, 6%. Mm-hmm. You go, wait, something is happening. Something's different. And that's when those guys are willing to buy it for more, or they're willing to sell it for less.
And so what I guess what's interesting to me is because, there's so many different kinds of investors in the market. Some is just it's a long-term approach and we're looking for growth. Some probably have hey, this is what we're going for. It's very set. It's not, I hope this does well over a long period of time. It's here's our goal in terms of what we buy and sell at, right? And we want to make this much money. So kind of understanding, I guess, who the forces at play are when that happens. Of if it's a bunch of mutual funds or whoever, money managers, whatever, buying into a specific stock right now because they think, okay, something has happened that makes us optimistic that this will continue to grow. Mm-hmm. That's one side of it.
Yeah.
But then there's another side who is saying, okay, I'll sell to the highest bidder. Around a certain price is what I'm looking for. And those people have a completely different objective.
Absolutely.
So I guess, when people are either happy or upset with, why is the market doing this or why are they doing that? It's because you, whoever you are, whether you're trying to make as much money as possible, whether you have a specific number in mind for retirement, whatever it may be, you are playing one type of game. And everybody's kind of looking at the same chessboard, but we're all playing a different game with different rules and different criteria. Yeah. And so it makes it very difficult to anticipate what's going to happen because you don't know who's using your chess piece in a way that chess piece isn't designed to move for you, right? You're looking at the king and you're going, okay, I can move one space and I can do that. And somebody else is going, no, I can go diagonal 4 spaces, or I can do this, or I can run around the whole board. So I just think it's funny to see people think about it very, just one-dimensional.
I mean, you see that, because in our industry, like the way we do business here, we mostly focus on one type that you described.
Right, people accumulating wealth, people preserving wealth, generally aim towards retirement, with exceptions, obviously. But, this is only one facet.
Yes.
Of the type of investor that exists out there that are all playing with the same pieces we are.
Pretty much. And there's those big ones, the sell side, they call them.
Yeah.
Their job is to acquire it at a certain point before it goes to public offer, to get rid of it, to sell it. That's where their margin is.
Yeah.
And then after that, they don't care where it goes.
Yeah, I mean, we even talk about long-term fixed income.
No.
And that's something that people again don't realize who you're up against. You talked about, what was it, the 20 to 30 year? You said was usually insurance companies.
Yeah, the long 20 and 30.
So 20 and 30 year people are going, okay, what is you want to be, I guess, reactionary based off of the activity of a 20 and 30 year, right? So people are going, okay, this is happening with the 20 and 30 year treasuries or whatever fixed income, and now they're being influenced to do something. But you're being influenced, in this case, likely by an insurance company. Your insurance, the insurance company is not playing the same game you are, so you should not look at mass movement of what's likely an insurance company and base your investment decisions off of that, because what they are doing is not at all what you are trying to do. It should not be an indicator of your next move. So I think similarly, when you see certain things in the market, you can't be so reactionary to think everybody who's causing this to happen has the same goals and the same tools that I do, and they must be doing it for good reason, so I should too. Right? Because they're not playing the same game you are.
Unless you know what they're doing, then it makes no sense for you. Yeah. Agreed. That's a good way to put it. And that's why it is important to know your goal.
Right.
What are you doing? What you're trying to achieve? Otherwise...
Yeah, you can't define success based off of somebody else's metrics for what a good job looks like.
Those are some words of wisdom there.
Okay. We didn't cover every single player in the game, but I feel confident that the point, at least some understanding has been reached of not everybody is playing the game that you are playing. We're on the same board. We have similar pieces, but it is not the same game, and understanding that, I think, is helpful for not allowing yourself to be influenced by, again, people who are not trying to achieve what you're trying to achieve.
Agreed. Definitely. And we meet most of the people that we talk to, correct me if I'm wrong, they're trying to accumulate wealth throughout their life to meet certain targets, whether it's spending, retirement, whatever it is.
Yeah.
We have many of those, but we don't have, when you look at the bigger market, we don't have, say, short sellers. We don't have those who try to borrow this to pay for that. And that plays into the stock price day to day. But on the long term, it has a less of an influence.
Yeah, and to speak to another player in the game that doesn't play the game the way we play the game. For most of our clients, or I'll use us as an example, there is a world where that is somebody's livelihood. Meaning that's their salary, their income, their bonuses, whatever. That is where that stems from. And usually those are people with a more than substantial amount of wealth, right? Because they're in a position where if that doesn't work out, they're usually okay. For most people in our offices, including the people who work here, this room is where we make our living. It is not in there. In there is where we hope to grow what we've accumulated. It's where we seek to preserve and hopefully make a better financial future for ourselves. But that is not where we make our living necessarily. You're a little bit of an exception.
I'm just bold.
But again, we don't take the swings other people are taking because that's not our game. So again, I think it's important to acknowledge what should influence you and what shouldn't influence you. And for the most part, what's happening on there, while you should be aware of it and cognizant and thoughtful, and properly vetting everything that needs to be properly vetted, big swings, random occurrences, outliers, for the most part, are likely somebody else playing a different game.
I would agree with that, yeah. In our industry, yeah.
Okay. I feel good.
Me too.
I feel good about our tea time.
We've reached an agreement.
This is probably the most conclusive conversation we've had in a while. Yeah.
Because we're trying to find the end of it. Usually it's just open-ended.
Yeah.
It keeps building on it. Keeps building. We're building machinery there.
Well, thank you for sitting down and joining us for tea time with Taimi.
We need tea next time.
We need tea next time.
Yeah.